We got a lot to break down in this video, guys. Of course, at this point, you've seen Meta. It's collapsing. We're going to break that down, and we also have to go over the overall stock market, SPY, Triple Q. We're going to break down the GDP number that came out this morning, and of course, a bunch of other earnings that came out as well. So sit back, relax, hit that like button, subscribe, and let's dive into the video. So right now, it's about 11:15 a.m. on the East Coast when I'm filming this video, and look at SPY, guys. Even though it's not like it's moving crazy in either direction, it's only up 0.1%. Look at the volatility on the intraday chart. It is unreal. We started in the pre-market at about 381. We shot to about 385 after that GDP number came out. Then the markets opened. We dumped down to 380. We ended up running all the way back to 385, which was a move of about 1.2%. And now look at where we are. We're at $382 a share. So we're moving all over the place, guys. And as you can imagine, Triple Q is doing that as well, because we saw Google dump, Amazon dump, Meta is completely cratering. I mean, you can't even call that a dump. It's just complete obliteration on Meta. And you can see the volatility here on Triple Q. Pre-market, it was right around 277. Then it dumped down to 273 intraday at about 10 a.m. on the East Coast. Then it jumped back to 278. Now it's at 274. So we're all over the place. And I'm not sure if you guys saw, but we got the advanced GDP number, quarter over quarter number this morning. And that showed that the U.S. GDP accelerated at a 2.6% pace in the third quarter. And mind you guys, that is annualized, so take that number and divide it by 4, whatever it is. 0.65% is what we ended up increasing, which, funny enough, for the third estimate, the third GDP estimate last quarter, for the second quarter, it was down 0.6%, and that's when we officially got into a recession, technical recession, even though Wall Street and the White House denies it, right? And if you guys didn't know, there's actually 3 versions of the GDP. Today we got the advanced estimate, and there's actually 2 more. We have the preliminary and the final estimate, and typically the advanced release, which again, we just got today, is the most impactful, typically. That's at least what I've heard. I'm not an economic expert. I'm not a GDP expert, but from, my understanding, that's what we got. So we have 3 estimates, 3 versions. We just got the first. Let's see how this progresses here over, the coming weeks, months, right? So that is what really sparked a rally in the morning, because we ended up going from being negative 0.6 in the third estimate last quarter to now positive 0.6. People are like, wait a second, are we starting to bounce back here? Or is the economy starting to get a little bit better, right? Even though overall there's a lot going on, the fundamental picture still looks bleak, to say the least, right? So what do you guys think? Let me know your thoughts down below in the comments. And you know what my thoughts are overall in the short term, my key points here on the chart, at least when it comes to Triple Q and SPY. Triple Q for the bulls needs to break above 285, which clearly we're at 275 now. We did not break out of that point. We're struggling very heavily at that point. That was a resistance point from the beginning of this month, which, if you guys remember, SPY actually took out, if you recall, this already took out the highs from the beginning of this month. So Triple Q is a little bit lagging behind SPY here. And again, a lot of this has to do with big tech. Huge weighting on Triple Q. Those stocks are getting destroyed right now. So in the short term, Triple Q 285 on the upside, and I'd say about 270 if it broke that on the downside. That's not going to be good at all for the bulls. And for SPY, going back to this, we can see here on the 4-hour chart, 390 is a big spot. That was the high from the end of September. That's got to break for the bulls, which we're not really showing any signs of that. We're just pretty much on SPY at this point, consolidating. Really just we've been flat the past roughly 2.5 days. So let's see what happens here in the 380s on SPY. Do we break 385, 390, or do we dump under 380, 375, 370? We're going to need some more direction here, guys. So with that being said, let's dive into some stocks and talk first of all about Meta. I know I talked about Meta yesterday, but let's do a quick little look at it, as now it is dumping under, well, it was momentarily, now it's a little bit above. It was under $100. It got to 97. Now it's at $100.25. You guys can see it is down 23% on the day. So for Meta, not only is their revenue growth decelerating by a massive amount, I mean, that's clear as day, their earnings are actually dwindling as well. So that's kind of like a double whammy. And a lot of people are freaking out right now because the metaverse is really becoming the main focus, of the future for this company. And investors, quite frankly, maybe they just can't wrap their mind around it. They're thinking like, wait, Mark Zuckerberg, you're blowing all this money on the metaverse, you're investing all this money, and it's really not coming into fruition, and it probably won't for years on years on years on years. So a lot of people are jumping ship because they think it's maybe too far out, the technology, which honestly, it might be. It really might be. At this point, all the billions of dollars being invested, which again is hurting the bottom line of Facebook, and the advertising business, which is a little bit separate there, right? That's getting destroyed as well. So it's kind of like a triple whammy. Everything going on right now, people are like, why are you investing so much into something like the metaverse when it's so far out, and all the overall macro problems going on right now? So people, maybe honestly what could turn around the stock in the short term would be if Mark Zuckerberg or Facebook, Meta, whatever you want to call it, came out and said maybe they're going to slow down and maybe not be as aggressive with the metaverse. That could turn around the stock price in the very short term. But at this point, guys, it's already down 80% It is down a whopping 80%, 75, 80 from roughly $385, which was the all-time high just about a year ago, which is just unreal, guys. So I don't want to get too deep into the meta rabbit hole, but that is what's going on right now. At the end of the day, a lot of people are freaking out. Nobody really knows. Well, I don't want to say nobody knows where the direction of meta is going, but it's uncertain. And when there's uncertainty in the stock market, especially with an individual stock, you'll be very surprised with what could happen on the downside. And this is reality. Meta is getting destroyed month after month, day after day, quarter after quarter. And who knows when that's going to stop? Who knows when the bleeding is going to stop, guys? So Meta down 23%. But on the flip side, this stock is up almost 20%. But first, before we dive into that, let's hear from our sponsor of this video, MooMoo. So it's MooMoo's 10-year anniversary, and to celebrate, they're doing a little something special here for a limited time. They're giving away $10 free guaranteed, plus up to 15 stocks, each up to $2,000. All you guys got to do is use that link down below or go to stocksurfast.com/MooMoo. Deposit at least $100, and again, you get $10 guaranteed, plus up to 15 stocks, each up to $2,000. Get your free money, link down below, and full disclosure, it helps out the channel as well, guys. And with that being said, let's dive back into the video. All right, so the stock is Shopify. Let's pull that up. SHOP. Shopify is up right now about 16%, so maybe not quite 20%, but 16%. It's up over $33 a share at the time that I'm making this video, and that's because they reported earnings that were pretty decent. And I mean, earnings were decent. EPS, it came in at -2 cents versus -10 cents because revenue, that wasn't that good on the flip side. $1.4 billion versus $1.83. So they beat on EPS, but they missed pretty badly on revenue, and the stock is still ripping, which is quite interesting. You wouldn't think that that'd be the case, right? But overall, it expects here to outperform the broader U.S. retail in Q4, and there's a lot of growth by GMV. The growth was aided by GMV momentum. That's gross. That's right, gross merchandise volume. That increased to about 11%, or increased 11% to about $46.2 billion. So even though they missed on revenue, if you dig a little bit deeper, some of the segments here are doing quite well. And overall, just gross merchandise volume, the fact that it increased 11%, that's moving the stock. So if we zoom in a little bit here on Shopify, it is breaking out fully at this point. Well, maybe not fully, but that inverse head and shoulders we called out, well, that played out. It's pretty much played out at this point. You can see here the left shoulder head, right shoulder break above the moving averages. We took the highs out from the end of September, early October, really just early October being about $32. And we pretty much filled the entire gap to about $34, $35. So Shopify looks pretty good here. And even though it's overbought, no doubt about it, it is overbought. If it breaks 35.36, momentum could still take it higher. Do not be surprised if we break 36, which is where my alert's at. We start making a move towards 40. No joke. You'd think that's not possible, but trust me, guys, with a stock like Shopify, it is possible. So what else did we have this morning? We had McDonald's report earnings this morning, and their stock is up over 3%. I believe their same-store sales, from what I remember, I already looked at their earnings, 9%. Let's see here. Yeah, they rose 9.5% same-store sales, which beat the roughly 5.8% estimate. They also beat on EPS, 261 versus 260, and revenue, guess what? Also beat $5.87 billion versus $5.72 billion estimated. So at this point, McDonald's is at a big resistance at about 265, 270. And to be honest, we're pretty overbought in the short term. And I feel like even though earnings were solid, we might get some selling pressure, or nothing crazy. I'm not saying it's going to collapse. Maybe just some profit taking in the short term before we end up breaking or testing 268 to 270 again. That's just my take. Who knows? I could be wrong. I have my alert at 267 just in case I'm wrong, because if that breaks, we break 270 as well. There could be a huge leg up coming on McDonald's. And mind you, look at this. Wow, I just realized this myself. We are at a high, or at a resistance, not only from just 2 months ago, but also from about a year ago. End of 2021 is where McDonald's was at 270. And isn't that crazy, guys? Wow, look at that. So if you were to buy McDonald's at the beginning of this year, guys, before the stock market collapsed, and mind you, McDonald's collapsed as well, but it's recovered since then. It's pretty much back to where it was in the beginning of this year. If you bought this stock, you would be at break even right now. And actually, you might even be in the green, especially if you reinvested those dividends. I don't know exactly what the math is, but you'd be pretty much at break even. That is crazy. As SPY's down a massive amount, Triple Q's down a massive amount since the beginning of this year. Forget about the Russell and all these small caps. McDonald's, you'd be at break even. That is amazing. That goes to show the strength of this company. And it's not the sexiest, most flashy company, but who cares? At the end of the day, it doesn't have to be. And that's where a lot of people screw things up in the stock market. They're chasing the next flashy thing, the next hot stock, the next hot sector, when in reality, a lot of the time, the most boring stock sitting right in front of your face, you drive by the company every day, in this case being McDonald's, that's the best investment. I'm not telling you this is the best investment being McDonald's, but I'm just speaking in general here. Sometimes what you'd think is boring, whatever, sometimes that makes the best investment. You know, boring is good. Boring is good. Index funds are freaking boring. Who wants to buy index funds and hold forever? Not many people find that so fun and, awesome, right? But at the end of the day, it's what makes a lot of millionaires in the world just simply buying and holding an index fund. That's just the reality of the matter. So with that being said, we might as well wrap the video up right here, guys. If you enjoyed it, hit that like button. Feel free to subscribe. And don't forget to get your 15 stocks plus your $10 free guaranteed for MooMoo. Just use that link down below or go to stocksurfest.com/MooMoo. And with that being said, I'll catch you in the next video, guys. Peace out.